Allianz Global Investors is an asset management firm operating in 19 markets, giving CEO Elizabeth Corley a bird's eye view of how the economy and money intersect. She joins me now. So good to see you.
Thanks for the invitation, Rhonda. Great to be here.
I want to ask you first about your views of the U.S. economy. How confident are you? Are your clients expressing any more confidence in terms of the recovery in the U.S.?
That's a great question. You know, until we see what happens regarding the fiscal cliff, nobody's placing bets one way or another. So what our clients are looking for is they're very interested in U.S. high yield, very interested in U.S. corporates. U.S. equities, very cautious. And on the overall economy, very wait and see until we know what happens on the fiscal cliff.
But in terms of high yield, does that mean they're starting to take on more risk?
Great question. I think all clients everywhere in the world are trapped. They need a return. They need a real return. We have financial repression. And yes, in some parts of the world, particularly in Asia, they're starting to take on more risk as they seek that income.
I want to ask you, just given the tumultuous couple of years we've had, do you view risk differently? Should we think of that concept differently now?
That is another great question. We, some time ago, started to do research on risk. We have a completely separate part of our business, which we call Allianz Global Investor Solutions, and they do a lot of analysis on risk. Clients definitely think of it differently. They used to think of strategic asset allocation and diversification. Now they think of risk, and they think of how much risk can I put to play, and then they look for a real return from that risk that is at play. It's completely different than it was, say, 6 years ago.
Do you expect that we're going to see big changes in the U.S. post-election, regardless of Obama, Romney? Do you have to advise clients now to position themselves based on who potentially might be in office?
I think the economic conditions both globally and in the United States are so big, it's almost beyond the presidential election. I think clearly one outcome could mean that we get more concerted work together. Another outcome might mean we get a stalemate. But in terms of the economic outlook, it's almost irrelevant. Clearly in defense and healthcare sectors, you've got very different potential outcomes. But for the economy as a whole, the question is, what happens to the deficit? What happens in terms of fiscal policy? And what do we see stimulating growth? And that's almost party neutral in terms of answers to those questions.
How tough is it doing business in Europe these days?
Well, for us, it's actually a benefit because we are very big in Europe. We're very trusted, fortunately, and we have a lot of insight into markets. So for us, our European business is doing quite well this year. I think for many asset managers who don't have that insight, don't have the resources, it's a real struggle because each market is different and the sensitivity and the risk attitude is different in every market.
Does it feel like Europe is improving at all in terms of the economy there?
I think since we had the OMT and the whole July statement from Mr. Draghi, it's definitely got better. It's bought us time and we see less testing of the currency itself. But clearly it's still a very, very long journey because we've got deep deficits, deep structural problems, not enough productivity, not enough growth. So we have time thanks to the ECB, we have a political will to make it work, but the fundamental problem for Europe is just insufficient growth.
And how about Asia? You're there as well, and
Yeah.
you travel there. There's been so much concern about Asian growth slowing, even though, of course, it's growing much faster than Europe or the U.S. combined. What's your view of the economies in Asia right now and looking ahead to next year?
Okay, well, I think clearly the big question is China. We're not in the camp of thinking a hard landing for China. We think that we will start to see, with the new establishment coming through, Q1, Q2, our expectation is to see a modest pickup in growth and clear policy direction in China, which will benefit the whole region. But even now, there are some parts of the emerging markets that are doing quite well. The challenge for investors is, are they valued fairly? And interestingly, if you look into Central and Eastern Europe, you can see parts that are really very, very attractive. In Asia and in Latin America, it's more mixed because we see long-term opportunity, but valuations that are fairly full in most areas. Other than for bonds, we actually see emerging market bonds as very attractive and emerging market currencies as offering good opportunities.
In terms of how your business is responding to this economy, are you expanding in this environment? Are you hiring?
We are actually. We're finding the opportunities to hire real talent because people in asset management are looking for safe harbors. So if you've got a good parent with a good balance sheet who's committed to asset management, that makes you very attractive. And then if you've got a culture which is looking for future opportunity, investing in new areas, that makes you a very attractive employer. So we are hiring and we're seeing high caliber people coming to us.
Elizabeth Corley, so nice to talk to you. Thanks so much.
Thanks, it's been great.
I'm Rhonda Schaffler. This is Reuters.